Yeah, above these little highs, literally is a huge pool of liquidity. Yeah, I'm going to zoom in, but you can see even from here, or if you're on your own machine, have a look at the, you know, at US 30 and see that double top. All right. So that liquidity up there is a concern. We might see a reaction from a double top, and they call it a cup and handle. All right. In regards to that reaction, but we've already kind of seen that reaction. So when they say cup and handle, it's like this. If you've never heard that term, ever seen it before, look, here is the cup and here's the handle. Okay. And that forms a double top. And then we understand that above these double top, there's liquidity sitting up here. Okay. Now, whether the market wants to go up there and take that liquidity right now is something else. However, we are going to read and react to what the market does. The markets are a little bit funny at the moment. They're not settled. There's a lot of sideways action, a lot of wiki action. We've seen Nas just dancing around yesterday, doing nothing. We've seen all these markets a little bit hesitant. There isn't that much news today. To be fair, there is a speech coming out, Red Folder US 30 at 3 o'clock, I believe, if I remember correctly. And like I said, we was looking in here as my alerts went off and we had liquidity taken from below Asian session lows. Now look at this market at the moment. It's a mess if you want to be honest. Look, it's all over the place. So we're here. We came into a discount. The market pushed up, made a higher high, higher low, higher high, got to the other side of our range. Then it made a lower low, lower high, and at the moment we're dancing around. Now the reality is that the market is currently trading within this box, okay? And if we're going by what the market has been doing, let's zoom out, got to my 50 minutes. Let's go to the hour. You can see us within this white range. We can see that the market was making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Came down here, put in relatively equal low-ish, and then pushed all the way back here, made an equal high. So on a bigger box, the market is trading within here. Now, I do not love the fact that we're sitting in the middle of that box. Okay? Hence the reason I said to you, all the markets are a little bit, yeah. Yeah. On a bigger picture, this market made this impulse here and pushed up into these levels. Now 50% is down here. Market's got the potential to come and retrace back into this 50% level, even if it wants to go higher. And yeah, I don't love it. I do not love it whatsoever. If the market's going to keep trading within this box, maybe we're going to push down in here towards this area here. At the moment, the little jab that I took has, continued pushing up nicely. Have a look at it if I do this. And that was just after seeing the liquidity taken from below the Asian session lows. Are we going to break this area here, or are we going to tap right now into an imbalance and decide we want to turn around? All right, either way, because I'm going to be quite cautious with these markets, I'm going to make it completely risk-free. I don't want to lose a single pound, dollar this morning or today. Look, we've seen this market make a very quick manipulation M and push down here. We are now tapping into that imbalance of the manipulation M if this market is going to decide to tap in and start coming down here. Okay, it's not impossible. Okay, and for that, because we're in this middle of the range scenario, I really don't know exactly what the market wants to do. Look, in the middle of this consolidation, sitting in the middle of a bigger range, if anything, we are a little bit more leaning towards the premium of this little yellow retracement. However, However, we are going to watch it and we're going to read and react. I'm just wondering what's wrong with my camera. Wondering what's wrong with my camera. It's not even seen, it doesn't even exist. Why don't you exist? Why don't you exist? I'm checking. Oh, okay, it's not pushed in properly. That'd be a good reason. That'd be a great reason why it's not working. If it isn't pushed in. All right. It just doesn't like it. It just does not like it. Let's do this. We're getting more alerts. Ring. That is our US 30 pushing up. It's good. Oh my gosh, my mouse has gone crazy. Stop it. Oh God knows what's going on. You see, technology when it works smooth. When you see the technology works smooth, oh there you go. Oh, I'm back. Yeah, when technology works smooth, you're happy. When it starts to play up, it's the worst. All right. So we've seen that jab. Let's have a look at that jab. Let's see why that jab was taken and what may be going on right now. We're just getting liquidity now taken from above that level. Down here there was, I don't understand why I have to keep putting in my levels all the time. Now if I do it on the split screen and then I come back to it, it's like it disappears. Let's do that. So we can see over here, liquidity was taken below here, and on a 1 minute time frame, we had a manipulation W that formed, and then the market tapping into that. It's not very clean because it was quite wicky. All right, can you see over here? It's quite wicky. Let's see if NAS is doing the same thing because I was actually looking at NAS for the same thing also. Yeah, NAS has done the same thing, but wasn't very clean at all. So this was the cleanest break for me. You can see this NAS here didn't really give us a clean break. Just push down in here and push straight back out. Didn't give us any real confirmations unless you want to drop all the way down to your 30-second time frame where we did get a lovely manipulation W and tap in. All right, on the 30-second time frame, yeah, that one was very clean. On the US 30 though gave us a nice 1 minute break, manipulation W after liquidity was taken, and I jumped in here on a jab. I wish it was a bigger swing now, but it is what it is. All right, as we've seen the market push all the way up in here and break structure. Okay, so I'm going to zoom in and I'm going to make US 30 my subject of analysis, and I don't love it still. I don't love it. Obviously we can see over here is like an Asian session high over here. To take into consideration the actual mountain tops over here, we can see a big old imbalance in here. Imbalance. And we can see over here there's a New York session high. I'd like this at least to get to here. I am in it risk free at the moment, but I would like it to get to at least get to that brighter red line of liquidity, which is Asian session highs. Okay, now the markets are not clean, they're not very attractive at the moment. Like, look at this. This is a mess. We're not bullish, we're sideways, pushing up here, doing some messiness. Oh, now we're going bearish, breaking structure. Oh no, wait a minute, we're stopping here. We're going back up in here. We're making these equal highs. We're essentially consolidating or accumulating. Now, just like anything, any accumulation, what do we expect to see after the accumulation? What do we expect to see after accumulation? Somebody tell me. After the market accumulates, what do we expect to see? Well, it's the manipulation and then it's the distribution. And ultimately, I'd like to see this market manipulate to the upside and then distribute lower. I'd like to see it manipulate up here and then decide it wants to start coming down in here. Okay. Whether that's going to happen right now or not is another question. It could decide that it just wants to rattle about in this area some more. Yeah. Getting down to the discounted level of the trend before it decides to do this. Okay. And that is who knows when that's going to happen. But for now, we are in the blue into some good profits in that jab on the US 30, which was an entry down here. Let's mark it out. After the liquidity was taken, the markets tapped in and, closed back above. So whether you took it on the tap in or if you took it on the closure over here on a 1 minute time frame, this is currently in profits. And in looking for this market to potentially push towards that liquidity level, which is an Asian session high. Okay. It'd be great if it just kept going, but looking there at least. Okay, in and around that area is some levels of liquidity. There's some different little highs above Asian session, above this little minor high, but we can see this imbalance here, liquidity above this level here, this little consolidation where this market was going sideways once again. Yeah, it's going sideways in here, manipulated, pushed down, tapped in, and started making this little bearish energy. On a bigger picture, when I look at it on a 15-minute time frame, the market is also kind of just tapped into a previous unmitigated kind of area. This whole kind of area in here, kind of tapped in. This little manipulation W in here. Yeah, it'd be nice to just see what this market does, but it's not very clean at all. The markets ain't making me want to risk the house on it. Like I said to you, that position that I took was only a jab. As in, when I say it was only a jab, I could have been 4 times bigger and been within my risk. Let's have a look and let's go and see what else is going on. UJ was ringing. Let's go and have a look at USD JPY. Again, I haven't marked it as any type of outside candle because it wasn't giving that energy. We have seen liquidity being taken from above the Asian session and New York session high. We dropped down to a smaller time frame. On a 5-minute time frame, we haven't broken any structure as such yet. Okay. On the 1-minute time frame, the market hasn't necessarily given me what we wanted to see and only broken some minor structure at the moment. Let's look at UJ on a bigger picture and see what the market has been doing. Okay. So I'm looking at UJ and I'm zooming all the way out, trying to get a bigger picture of what the market has been doing to maybe give me some sort of insight of what it may do. Okay. So that's the reason we're looking here. we can see this market is in a real premium. Okay. Making some higher highs, higher lows, higher highs, and continuing to push, making even more higher highs, like so. Just put some lines in here. We can see, okay, give me 1 second, yeah? I'll be back in a second. Give me 1 second.
Do you know what the difference between winners and losers is? One of the differences, winners take the first step. Losers always have an excuse. Winners say, okay, I'm going to do it, and they do it. They take the first step. That doesn't mean they jump off a cliff. It just means they take the first step. And if you take the first step, the second step will appear, and the third step will appear. It's almost like those lights that light up as you walk along. Well, what happens is that you take the first step, every subsequent step will appear. And surprise, surprise, you'll turn around a week, a month, a year, or some years later, look back, and you'll have accomplished extraordinary things. And people say, well, you're sure lucky. You're sure lucky. It wasn't luck at all. I worked at it and worked at it and worked at it.
Start walking. You got to start walking because the perspective's not going to change. You have to start moving forward. You have to start taking steps in order to improve your vision, improve your perspective, change your perspective, make some kind of progress. And worst case scenario, you figure out that you walked the wrong direction. Okay, now you can go walk in the other direction. And that's going to be fine. But standing there lost and not doing anything is just waiting to die, waiting to starve to death. Don't let that happen.
You just got to keep moving forward. If you're feeling hurt, keep moving. If you're crying, keep moving. If you don't know what's going to happen, keep moving. I just need you to keep the momentum going and not sit down and feel sorry for yourself. You might not see it right now, but all this crap you're dealing with now, you're going to be glad it happened. You'll feel fortunate that it all went bad.
When the world tells you it's over, when it seems like there's no way out, that's when you fight the hardest. That's when you prove to yourself and everyone else that you have what it takes. You show that no matter how dark it gets, you will find a way to shine.
It doesn't matter how cautious or careful you are, life will always hit you in the face. It's gonna hurt like hell, but the question is, how hard can you hit back? How hard can you fight back? How much of a fight are you willing to put up for your dreams?
Because if you really care about it like you say you do, you don't fold at the first, second, third, or even the 22nd time something or someone tries to knock you down and stop you on your path to greatness. No, you keep destroying everything in your path until you get exactly what it is you want. And you stop at nothing to reach it.
You can't just focus on this moment. You've got to hold the vision. Hold the vision of things improving. Hold the vision of your health coming back. Hold the vision of being financially independent and debt-free. Hold the vision of your relationships working out. Hold the vision of everything being all right, because it'll give you power, give you strength, give you faith, give you patience, give you perseverance. It'll give you the ability to snatch victory from the jaws of defeat.
And when you discipline your emotions and you don't allow them to control you, when you tell yourself, I'm in charge here, I set the course for my life, these storms that I face, they do not have power over me. When you declare that to yourself, the limits for you become non-existent.
I am sick and tired of people coming to me saying that they had a setback. It is a part. Let me tell you something. My greatest moments didn't come from my greatest moments. My greatest moments came from my greatest defeats, because it was during my defeat that I had to find a way to get back up.
If you're tired of starting over, stop quitting. If your life at times
my little man, he's got a bad knee. We need to sort out a little knee brace for him. So we can see here, USD JPY, my alert just went off. We are right up in a premium. We came here, made a higher high all the way up here, swing high, and then the market came down here, and we kind of broke structure over here, making a lower low. This is a lower high. Let's have a look at why my alerts went off. My alerts went off. Let's drop our time frame down to an hour. Let's have a look at a look. Yeah, we can see this type of energy from here. I'm going to make it a different color so we can see it. I'm going to pull out a bottom end, kind of like this, all right? It's not the greatest, it would be kind of like this. Now, if we drop our time frame all the way down to a smaller time frame, we can see that the market came down here into this discount and we started getting some conversation happening. That conversation was about whether or not we are going to go up or down. Look, we made low lows in here, then we came up here, made kind of higher highs. We're kind of going sideways in here, blah, 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 blah. Absolutely, you know, we can see this conversation. All right, because the market is not really trending in a direction. It's just kind of ramping. Like I said to you, none of these markets look really tasty from a bigger picture. Though I am in the blue in a US 30 buy from an area, not because it was a tremendous trade. It was just I saw a little break of structure, as I told you guys earlier, and I jumped in for a small jab. It's making a bit of a retracement now, to be fair. But it's risk-free, and I'm just going to leave it, all right? Now, the reason why my alert started ringing in USD JPY just now was because of, let's get rid of this. Let's do that, let's do that, let's do that. Was because we just took some liquidity from below Asian session lows. And the question is, we're in a discounted area and potentially, you know, we're looking for a buy from a discounted area, and we've just taken liquidity from below Asian session lows. Now, there are some other series of lows that have liquidity sitting below it as also. We've got these lows here. We've got previous New York session lows over here. The market's just taken this extra little low over here. So if I'm going to turn this liquidity line into one that says liquidity taken here, I'm going to have a look at it on a smaller time frame and see what going on. Well, on a smaller time frame, we're having a very small reaction at the moment. Nothing to write home about, okay? It's not the kind of confirmation break that we'd like to see in regards to a manipulation W, but we can watch it and see what going on. Okay, we can watch it, keep an eye on it, and see whether or not we're going to make a manipulation W pattern, which essentially just identifies to us that it's had a slight change of character into coming from making lower lows and lower highs to potentially making a higher high. And then at that point in time, we can wait to see the market tap in, yeah, and then as they make a higher low, and then we can enter on the next higher high. Yeah, if we want to be very aggressive, which is going to be difficult to do because we're on such a small time frame, is when the market taps in, we can zoom in and get a better entry. Now, what I'm going to do, because these markets all are such a mess, there's nothing too tasty, is we can go through a little education on a plain screen in regards to refining the strategy. Okay, I've shown you guys little plays and little playbooks and little things that happen in the market. That's fine, but I want to make sure that everybody's very, very comfortable with understanding, you know, all the pillars of how we trade. Okay, so first and foremost, we keep it simple, stupid. All right, if the market is doing this, I don't care what strategies and how many courses and how technical it was on YouTube. If the market has been doing this, it has been trading within a trend. And the question I like to put to you is, why do you believe that at the time that you've decided to go and pick up your laptop and come to the computer, why do you believe anything is going to change? Like, just because you entered the room at that point in time, you know, things are going to change because, you know, they've heard you've walked in and now the market's like, oh, well, Jeeves has just walked in, Jigs has just walked in, so let's start doing something else. That's not how we trade. We make the assumption that the market's going to keep doing what it has always done forever and ever and ever and ever until it decides to do something else. All right? Meaning that if I've seen the market doing this at this line here, surely I'm interested in buying. Yeah? Surely I'm interested that this is a discount area and I'm interested in buying. Why? Because in the past, every time if I'd bought from that line, I'd be quids in. And from this line up here, I'm going to be interested in selling. Why? Because every time the market gets up to that line, it has a reaction and the market sells off. That's the basic outlook. When that market comes down in here, for argument's sake, I understand that the trade I'm actually taking is against the trend. If I was going to buy it, I would be sitting there saying that this trade that I'm going to take is against, let's have a quick look at UJ. Okay, don't worry, we'll get back to education because it's not setting the world on fire. For me, structurally, has taken some liquidity from below those levels, and there is a potential opportunity, but not more important than overstanding the education and understand, giving you a refresh for the people that know it, and it's like, okay, Jay, you're going through the basics. Well, good, because these markets are basic if you know, look at them in that way. So from down here is where I want to buy the market, but I understand that I'm buying against the bigger trend. And what I can see, even if I go back in time, is I can see that the market typically retreats back to these previous battlefields. Yeah, look. Yeah, so let me put in some words in here. Text. Have I missed the E? It's looking a bit funny, like I missed the E. Looks like maybe there should be an E in here. I feel like, you know, that guy that he stops people in the street. When you see him on Instagram, he's like, spell retracement. I don't know if you've seen him on Insta. Just murdering the British public. Like, what's 2 times 2? And it's like, everyone's totally confused. Can I change the angle of this? Don't know if I can. This energy in here, we understand, is a retracement. And every time that market retraces, ultimately we've seen it tap into a previous battlefield, which more times out of 10 is what percentage of the impulse? Does anybody know? Whenever, like, more times out of 10, this retracement is what percentage of the impulse. And if you don't know what the impulse is
it 50%, bro?
Yeah, approximately 50%. Now that's not set in stone. That's not like a foregone conclusion. You're still gonna have to you know, wait for confirmations and blah 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 blah. But this is what we see. We see an impulse happen here, then we see a retracement that typically is 50% of the impulse, that little green, that leg there, and tapping into a previous battlefield. Over here, let's go and you see me market here saying previous battlefield. All right, so if I'm down here and I've seen the market push down into this discounted area and I zoom in, okay, so this is my zoom, because obviously this is a very high level presentation. You guys can see, whoops. What's going on here? This is very high level presentation. I don't want them to not understand. On YouTube, there is nothing but high level presentations out here. All right, so this is us zooming in over here. Obviously. There you go. Now, inside here, what we want to see is we want to see the market accumulate, then manipulate, then distribute. So in here, we see the market start to do this. Oh no, in fact, first as the market started coming down into it, it was coming down like so, and then it came to a level and started to do this. Now for us being in the UK, luckily, when we wake up, we have the ability to frame our decisions based upon the Asian session. Now, why is that? Because the pairs that typically we want to trade are US pairs. Yeah. An Asian session, or even when we trade GBP, what the pairs we want to trade, the GUs, the NASs, blah, 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 blah. It's over Asian session. We typically see them. We see the markets consolidate. Okay, typically we see the markets consolidate through Asian sessions. Let's give you guys some more text. Asian session. All right, typically that's what we see. So therefore, that's quite easy for us. Now we've got a larger time narrative that we're thinking to ourselves, maybe there's going to be a buy happening from this discounted area, and we're waiting here, and we've seen the market come in and go sideways, like it's having a conversation right in this discounted area. And then what we're waiting for there is the market to manipulate like so. And once again, have a look. The tapping looks very similar to this concept that the market, when it was coming down, did the other way around. It came back and tapped into 50% of the impulse. This looks like the exact same thing. The only difference is now, if the market is changing direction, and if this lets me grab this little thing here, which is like it doesn't want to make me do it, makes me want to write it again. The market's coming back. Now this may be becoming the impulse. This there may be becoming the retracement. Yeah. And then what we're waiting for is that next impulse to push in this direction. We have a lot better terminology for it, which is an indication, a correction, and then a continuation. And then we see this market start to do this and distribute higher. Whoops. Yeah. We see this market distribute higher. And on the bigger picture up here, this market is distributing and pushing up from this discounted area, trying to get into a premium before it decides that it wants to get back with the program again. And once again, that little area in there pushed up here into a previous battlefield and around about 50% of this impulse. And it happens time and time and time and time again. And that is what we're looking for. That is what happens in the markets. The markets accumulate, manipulate, and distribute. And the markets move from premium, which is going to be, see where the text is going to go. Premium, top, center. Oh, there you go. To discount. That's all the markets do. They move from premium to discount, to premium to discount, to premium to discount. It gives the markets balance. Any questions? Any questions? And it doesn't matter if it's a stupid question or you think it's a silly question. Ask the questions. Get your education. Get it sharp. Any questions?
I'm live, man. You know me. I'm on the lappy, just watching.
You get it? So when you see this market doing this and you understand this is what the markets do time and time and time again, if you're on your lappy and you're doing your homework, you're in the gym building those trading muscles, a great way for you to do that is to back test and try and train your eyes to see this happen. Because I've drawn it all beautifully with beautiful manipulation W's, very clean structure, all nicely within this little range. But in reality, it's not as obvious sometimes. Sometimes it's a little bit uglier. Right now, I'm in that US 30 buy and made a 1 minute very ugly, well, not beautiful breaker like W. This here, this manipulation W wasn't, and this was because we're not only looking for that, we're looking for when liquidity has been taken. Obviously, liquidity is taken from below Asian session highs or anywhere else that we've seen a level of strength and speed, the price moving away from the past. Below that level is normally liquidity, unfilled orders. Yeah. That when the market comes down there, maybe there's some additional orders that need to be filled. Okay, and liquidity is the other concept of a pool of capital. Yeah, pool of money. So like I said, if I was backtesting this, even though we're on UJ, might not be a typical market that we're watching, we're looking to see, all right, cool. We're going to 5 minute time frame. And can we look at this chart with our eyeballs and be able to understand or see how the market moves in regards to market structure and be able to see accumulation, manipulation, and distribution? Yeah, is it something that we can see? Is it something that's difficult to see? Some markets it's more obvious than others. Some markets have a lot cleaner structure than others, okay? But we understand, for example, when we take the concept, remember, bearing in mind, we've just drawn it out. In fact, I tell you what, let me zoom back into this because somebody was looking at that and wants to take a screenshot. Wants to take a little screenshot of this concept, yeah? And so let me get rid of this because this, what we should be saying here is an indication. Indication. Okay. Wow, what's happened? Indication. This one here makes it a bit bigger. Correction. And then after this, we get something that we call, if it's going to let me, continuation. Yeah, you can see over here also, I'll put in, make this a little bit bigger. Make this a little bit bigger. And I'll put a little label in here just so you can see what was my point was. 50%. We'll make that have no background, and we'll make the text be green. 50% of the impulse retracements normally come to. Now, is that set in stone? Sometimes they push up to the 618. Yeah. Sometimes they do something else. They wick up to certain things. Remember, mixed in all of this perfect, beautifully drawn, market structure is fundamental news, is volatility, is manipulation. Yeah, this is just a, template, a diagram, a oversimplification of what happens in the markets. But you must be able to at least identify this energy. This is me zoomed in. For those of you that came a little bit late, this is the zoom in of what is happening in here. So I'll give you 5 seconds. If anybody wants to take a shot, if you don't need to, that's cool, because this is basics. But the markets are basic. We overcomplicate them. All right. 5, 4, 3, 2, 1. Now, it's not only Asian session that gives us this sideways consolidation, but it allows us a playbook of using Asian session as that accumulation area. All right. So let's go to, and let me go to US 30, as we're in US 30 at the moment in the blue. And we'll go back and we'll back test. Okay, we will go back and back test. So let's see how we back test. Let's zoom out. Let's give you some more screen. Let's hit refresh. The reason why I'm talking through everything I'm doing is so that when you are using TradingView, I'm subconsciously teaching you about all the features and functionality within the screen. Knowing where refresh is, knowing how to get to the start of the charts by hovering down at the bottom of your screen and supposedly seeing an arrow over here that for whatever reason obviously it's not there right now. Refresh. So let's back test. You see, on a bigger picture, which is an hour time frame, we can see these cycles of the market. Now let's take, for example, just here, and trust me, this isn't one I made earlier. This is just me going back into the markets. I can see that this part of this market was bullish. As soon as it stops being bullish, my eyes are able to go, this market came up here and then came down to this level in here, stopped. Have a look. As soon as this market came up here, made a high, made a low, and then failed to make another higher high, started just ramping in here. Yeah. my eyes are immediately drawn to this sideways action because on a smaller time frame, that accumulation, manipulation, distributions happened about 5-6 times in here. It's happened multiple times in here. Yeah. So when I see this market coming into this type of energy where the market is kind of moving sideways, then once we see this energy coming up here, we could say this is a manipulation. And then the market starts to distribute down here. But this is a manipulation also of this bigger kind of sideways energy below these lows, taking liquidity. Yeah, so this was a smaller manipulation. So pushing down here. This is another manipulation in here. And after that manipulation, the market distributes higher. Yeah, and it happens over and over and over again. Have a look. If I zoom into here, because I'm on an hour time frame. If I zoom into this area here, let's drop down to my 5-minute time frame. Let's go and find that yellow circle. Where are you, yellow circle? Where are you? Where are you? We've lost it. Let's go and see what time. The yellow circle was December the 5th. Okay, and we can go in here in our calendar. We can mark December the 5th. Oh, whoops. The 5th, I think this is all backwards. Maybe. 2024. I think it's about 5. I don't even know, either way. Boom. And now it's saved in there. All we need to do is click that and it goes back to December. Now if we drop all the way down to our 5-minute time frame, when I hit this button here and click go to, you see, it's brought us back to our time. Why am I talking that out loud and telling you about the calendar? So that when you're doing it, you know how to do it. All right. Now look, when we look in here on a small time frame, remember what I said to you about our Asian session? Our Asian session was in here, ultimately going sideways in this kind of energy in here. If we zoom out, if I go to my 1-minute time frame, it looks even more sideways. All the way from the market was over here making these highs here. This is just all sideways energy. Yeah. If you can't see that box, let me give it some more welly. Why is my box just not giving me? Who knows why my box ain't giving me? Oh, the background wasn't selected, that's why. So if I go in here, make it very dark red so it doesn't affect your eyeballs too much. This is the accumulation. All right, that is the accumulation. And then after the accumulation, what are we expecting to see? Let's all say it out loud.
Manipulation.
Manipulation. Yeah? Manipulation. Oops. Manipulation. And after the manipulation, I'm sure I just typed that. There you go. We're expecting to see what comes next.
Distribution.
Distribution. And this is where we jump. We get our sleigh. And we go, wee, and ride the distribution. Yeah, where to? To structure. And a nice place that if I was in here, I'd be going for New York session lows. I'd be like, yeah, why not? Why not go for New York session lows? and the market goes through London, starts to push down. London, we had a little spike back up in here just to get rid of all this liquidity that was sitting above here. Everyone thought they was going to get in there with some nice small stop loss. London, New York just took the piss. But then we got back with the program and bingo, hit our target. Now, this is an example of when we turn around and say, if you took this trade somewhere in here, we just stop above that swing high. This is one of the trades or one of the examples where we say, don't fiddle with it. So if you fiddle with it, New York would have stopped you up. If you left it, you could have caught a 1 to 15 trade. Even if I had to be conservative, 1 to 10. Now, in hindsight is great. In reality, what you would do is when you get to a 1 to 3, you take 50% off the table and then you leave the rest to ride. Unless you're having a great day, you're feeling really confident and you're just like, you know what, I just want to see this one out. Yeah, because you've managed your risk and you're like, yeah, I'm already up $1,000 for the day. If I lose $100 here, it's not end of the world. And I really believe that this market's going to get down to previous New York close. The market does this over and over and over. And what I understand is even though I'm on a 5-minute time frame, on a smaller time frame in here, I can get more confirmations and see a smaller entry. Let's see. Let's go to my 1 minute. Let's go back to that time. Obviously, the market doesn't want to give me the information because it's hating. Let's go to the 2 minute. Let's see if the market's a hater at 2 minute. The market's just a hater, just hating. It's hating on me. Cool. It's not giving us the information. It's not giving us the data that far back in time, which is annoying. Not even on a 3 minute. All right. So the 5 minute was really the last level that it was giving us that data all the way back to. I wanted to zoom into here, but what I'm telling you is in there is a lovely manipulation M and a tap in. Do you want to see it? Try and train your eyes to seeing what I can see. Even though we can't get on a smaller time frame, it is this. It is up, it is down, it is up, it is down, however way you want to see it. It is tapping, it is we're off.
If you're basing your distribution on the structure from New York, right, but there's no like big structure in the last 24 hours, how far back can you take your structure to
Sounds
guide
like a
your
good
stop
question.
loss?
Let me understand what you've just asked. You said I'm basing my structure based upon New York.
Yeah, so your stop loss, like you based it on the New York low. But if there is no New York low, like do you base
Oh, as in this TP down here?
Yeah.
Okay.
Is there a time
I
limit?
base it
like
upon
to-
structure. Okay,
Yeah.
so a great question. Here's a good question. All right. So structure depends on what time frame. Okay. Now, if I've gotten in this trade as small as this, and I'm down to and I've come to a level of structure, because this wick here is a wick on 15 minutes time frame, but how I got in on the smaller 1 minute or 2 minute or 5 minute time frame, whatever it was, this is candles. It's not just a wick, and it is a level of structure, and I'm at a 1 to 10. The question I've got to say to myself is, what is it that I'm trying to achieve from trading? I'm at a 1 to 10. That means I gave you $100 and I'm coming back with $1,000. Yeah. I have to be happy with the fact that this level here is the first point from where I've entered. So I've made an entry over here. Actually, where's my little circle gone? Make sure I'm actually looking at the right. All right, so I've taken an entry here after after the market's manipulated over here, and we've got an entry in here. Now from here, this is the London session, okay, up here in here, and the first point of structure would have been Asian session lows, would have been. The market came in here and tapped Asian session lows nicely. So if I want to be, if I want to say on a conservatively, if I got in here on a nice smaller entry as I showed, that is the first target. A lovely 1 to 6, 1 to 5 trade. Because that is Asian session lows. That is New York coming and taking Asian session lows. Yeah, which it didn't, it smashed through here. But I'm just showing you structure. Forget about these Asian sessions. Without this on here, we can still see structure. If I go to my line chart for argument's sake, if I make it, if you want to go cross-eyed, it makes it easier. Or if you want to go to like larger time frame, I am looking for points of structure, points where the like mountains and valleys. That's what I'm looking for. All right. So if I put some dots, bearing in mind I got in up here, even though it's ugly and it's a bit hard to hide the stuff, got in up here. I am looking for all of these. Well, underneath here, I know there's liquidity. The same way there was liquidity above here, there's liquidity below Asian session. So I'm believing this session's getting blown through, which it does get blown through. Easy money, 1 to 5. But all of these, you know, points, which are actually longer than that because they've got wicks and the line chart doesn't show them. All of these points are points of interest. They're up. For some reason, the market was coming down and bang, it hit something and turned all the way around. For some reason, this market was coming down and bang, it hit something and turned back around. So if you was driving in a car in a tunnel and you knew that 2 of your friends have driven down that tunnel previously, and at this point, bang, they hit a wall and had to turn around, you'd be interested in taking your profits slightly before that point, or stopping your car slightly before that point. That becomes a point of interest. This becomes a point of interest. This becomes a point of interest. Because the markets were tumbling down from here and bang, hit something. What it hit was lots of buy orders, lots of demand at that price. That's what it hit. So if you're in the trade, or let's use the example of being in this car and you're going at 100 miles per hour like this, you've got to be like, rah, Jermaine and Justin had problems previously at this level here. I'm going to either take my profits or at least get very small on the time frame and watch what price does when it gets back to that price. Because the concept is that there are unfilled orders at that price point. Let me explain this. See, I've explained it many times, but I'm going to do it one more time, especially as we're recording. We make an assumption that there are, you know, big institutions that for whatever reason wanted to buy around this price point. So if we look right, we can see, let's just say 44, I don't know, let's just say 44,750 for argument's sake, let's keep it round. Someone said, look, to the market, so the guy who had, you know, the magic beans, I'd like to buy 1 billion magic beans when it gets to that price. And they said they had his orders sitting in the system, wanting to buy 1 billion magic beans. When the price got down to this point here, there was only 500,000 magic beans. So the man said, all right, cool, I'll take what you got. Took the 500,000 magic beans at this point here, and it pushed the market up, just like anything would. If you come in and make huge demand and bought 500,000 of something, when everybody else was buying 5, 10, 20 at a time, you're going to move the market. So the market had a reaction to that, boom. But you're down here and you're like, I said I wanted 500,000 magic beans. I mean, 1 million magic beans. Yeah. and you've only bought 500,000. So you still need to buy another 500,000. When the market comes back down here, boom, wasn't quite at the price that you wanted, but it was close enough. You might have said, listen, anywhere around, cheaper than 44,800. Can you see that number over here? Anything cheaper than 44,800, execute my order. So when the market came back down here, boom, you bought as much as you can. Now the question is that, did you buy the whole 500,000? Or was there only 100 or 200,000 beans? Meaning next time the price comes down to there, do you still have more orders that need to be filled? Or this time here, did you actually get your other 500,000? I don't know. You don't know. We don't know. So therefore, when this market comes down there next time, we consider the market actually just drop through that 48,000 or 44,800 level. Why? Because those orders here were filled. You've got your patty, you've left the counter. You're gone. You wanted, 50, 100 patties. You got 50 at first time. You had to wait a bit longer. When the price came back down, you got your next 50. Then you've gone. So when the price comes back down to that price, 44,800 for argument's sake, you're no longer at the counter. You're no longer a buyer. Your demand is no longer there. And the market drops through that area. There's a couple other little buyers, that love the fact that it's got all the way down to 44,750. He buys a little 100 patties over here, moves the market. Someone else over here was, oh wow, look, 44,700. He buys a little 300 patties. But ultimately, you was the big boy in here that had loads of unfilled orders, but you've gone now. You're happy. You got your million. So the whole point is, as traders, we have to look at these levels and try and make a story about them. Something happened. If I zoomed into that, I think I can be able to get down to 5 minutes. Go back to that time frame. Look, something happened. This market was coming down here like the clappers. Brrr, making lower lows, lower highs, lower low, boom, smashed into something here, because from here we pushed all the way back past it. It shifted the market, mate. So I have to respect this level. So when we get into a trade and you're asking me where are we looking for structure, we're looking at levels that we got to respect. I believe we're going to blow through this level here because I understand that there is liquidity sitting below them equal lows. Just like there was liquidity sitting above it that we manipulated into, nam. I know that there's liquidity also sitting below, because that's what happens with any type of consolidation. There is liquidity above and below. So I know we're going to blow through that level. So we blow through that level, boom. That's our first checkpoint. Ding-a-ling-a-ling-a-ling-a-ling. And if we took our money there, or we took 50% off, then we would have been good. Because when New York kicks off, we did see some volatility that actually wicked all the way back in there. And in hindsight, it's easy to be like, oh yeah, great. We stayed in the trade and it went all the way down here. But in reality, if you had moved your stop, you're getting stopped out by this volatility. All right. So that was our first target, a 1 to 5, and we're happy. But every single one of these points where we can see strength and speed, obviously this is the 5 minute time frame. If I wanted to, I could say this is an area of interest as well. Yeah. And you can see here when the market took that level where, look, the same concept. There was some dude over here that wanted 1 million patties. He bought 800,000. When the price got back down to that level, he got his other 200,000 here. Hence the reaction in the market, because his orders were still live. He wanted 1 million. He only got 800,000. But after these 800,000 or his 200,000 gets bought again, the market runs through his level again. And then we moved on to the next customer who, for whatever reason, there's some volatility. We know that the market's just open here. New York just opened here. So let's look at what happened. London was open before, or whatever was happening back in the past. But New York opens. Is it New York? I think it is anyway. New York opens over here. And New York's got New York customers, yo. And the New York customer, there's one guy over there, his name's called LeBron. LeBron said that he wanted, you know, 500,000 patties as well. But they've just opened now. That's why we see all of this liquidity come in the markets when the sessions open. Because I'm in London now, I've just woken up, I've got to the office at 7 o'clock in the morning, and I look at my desk and I'm like, I've got Jermaine's order I need to fill, man. He said he wanted patties around his price. Oh, look at the price. It's a good price. Let me buy for Jermaine. That volume comes in the market because now we're all sitting on our desks filling these orders. Same thing that happens. New York happens. All New Yorkers now, hey, man, with their little accent, they're at the desk and they're trying to fill LeBron's order. And then we see all this volume come in the market. And that's where this energy came from. Boom. That order gets filled. Boom. When that order gets filled, they've got some previous orders, as well as London session, because London session and New York session overlap. They've got some previous orders that when the price gets back up into here, the same place we manipulated from, they've got some other big players that want to sell at 45,000. See the number? At 45,000, they've got some big players that have got huge amount of patties and they just want to sell. So even though Jermaine or LeBron got his little buy order in, there was some other massive sell orders sitting in the market, and when the price got back up to 45,000, because London had some big players that wanted to sell around this area, and so has New York. So we've combined that energy, and there's a lot of selling happening in that market. Hence the reason why that market. And why does it keep selling? Because people are like sheep. They see things selling and then they start selling. And then more people start selling. And the more people start selling because the crowd is running in that direction. So we just said that's the direction of the market and that's the moment we get. But that can happen just from one big player, or institution placing big orders in the markets. It's like these meme coins, like some of these meme coins, you can move the market single-handedly if you had enough dough. Because that market is going up. Everyone buying in the meme coin space, buying $100 worth of, a Polygon meme coin. Someone's going to put 150, someone put 250, someone puts $1,000. Oh, the market jumps a little piece. If I step in there and I just go and buy 100 grand's worth of some meme coin, I'm single-handedly going to move the market. And all the other people will be like, look, it's pumping, buy more, because we're like sheep. And that is the self-fulfilling prophecy, and the market continues to go up. Hence the reason why when you're looking at meme coins, you don't want somebody like me to have 10, 15% of the market. Because if I dump my 10%, the way the impact it has on the charts, everybody else starts seeing a massive red candle and goes, oh my gosh, I'm getting out, mate. I'm taking my money right now. And they sell. And then somebody else sees that and then they sell and they sell and they sell. And all of a sudden that meme coin dumps. So in the Forex markets, it's a similar concept. The only difference is that there's probably no individual that has enough money to move the US 30 market single-handedly. So we understand that the only people that could be out here doing some, moving the market, making some big scenarios happen, making the market stop going up and bang, hit a wall, must be some sort of big institution, some sort of whale, some sort of player. And we just want to jump in where the whales are jumping in. We're not moving the markets. The big institutions, the whales, they're moving the markets. So we just want to get involved wherever they're going to be doing, whatever they're going to be doing, and ride that wave. And that's a way in which we can identify maybe where these whales are sitting. Hence the reason why I speak to you guys and I say to you, we look for strength and speed. In this little move here is just an example, not one I made earlier. I haven't cherry picked it. We can see that the market was going up here. 5 minutes, 10 minutes, 15 minutes, 20 minutes of just buy all the way up here. And then we've seen, boom, a big red candle to not only reverse. Think about it. I can push a car, right? Man's been going gym. You can see pecs. Man's doing his thing. Yeah, all right. And I can push a car if you take the handbrake off. That's 1 degree of strength. It's something completely different that the car's coming towards me. It's rolling towards me at 5 miles per hour, and I can put my hands on that bonnet and not only stop it from running me over, but push against it, against 5 miles an hour. So your foot don't come off the gas. You still got your foot on the gas at 5 miles per hour. Now I can push against 5 miles per hour and push it back in the direction it goes to. That's what's happened here. This market is going up at 5 miles per hour, and something bigger and stronger came in and pushed it down past where it was going. And then after it's done that, this is a bearish engulfing pattern. People start saying, well, this market's going down, red to 10. Then all the smaller players and everyone else and all the other sellers start getting in the market. Blah, 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 blah. The market continues to sell off. So when you look at the markets, you have to try and, I know I get quite fictional with it, yeah? And I green screen the whole thing. But you have to try and understand that there is a story being told. There is, more information than that's just a red candle. You've got to think to yourself, wow, look at this big candle. When this happened over here, okay, you got to look at this and think to yourself, let me wipe my charts, in fact. Some serious selling came into the market here. So much so that it made this market inefficient, leaving an imbalance in here on the 15-minute time frame. So you know that this area, not a particular price, this area, there's a lot of supply in the market because some players, one or many, was able to push this market to the point where it made the market not only break previous structure, but actually make the market inefficient. It's like I walked into the patty shop and I ordered so many patties that the whole organization just started popping down. People were confused. The chef was tired. They ran out of flour. They ran out of, filling. It was just madness. They didn't have enough bags. Me alone, I came and wrecked the whole scenario. The patty shop doesn't like that. Doesn't want people thinking to themselves their thing's a joke. All these guys that were in the shop that wanted patties afterwards, now they can't even get no bags. They can't get no, all the cheesy beef's gone. Yeah, there's no vegetable patties there. Man are upset. So we understand that this becomes an area that this patty shop wants to show all of its customers, no, we apologize for that. You can come in here and try and get your patties at the price you wanted, because the market got very inefficient there. You can sell at this price. In this instance, it's about selling. Yeah, it could be about buying, but you get the point. And then we see the markets go and fix that. Now, even though this market had a moment in time where it was a mess, that their whole organization was totally, they fixed it now. They've given all these sellers here an opportunity to get in the market and sell at the price they wanted to, gave everybody an extra, some extra jerk sauce, says sorry about that the other day, blah, 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 blah. And now they've kept their customers and everyone's still happy. Efficient company. Not the fact that they had a problem. They always say in business, it's not the fact that you have a problem, it's how that problem's dealt with. If you have a problem with whatever company you're dealing with, You might be upset at the time, but if the woman on the under or the man at the other end of the phone has great customer service, says, I apologize for that, sir. I can see your problem. Boom, 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 boom. We're going to fix it. I'm going to email you back. They email you when they say the email. Furthermore, he goes, you know what? True, we understood it was our fault. We're going to give you a complimentary extra month on us. You forget about the problem. You're just like, yeah, they dealt with it well. They're efficient. You're still going to continue using your Virgin or your EE or whatever it may be if you had that type of experience that when something happened, you had an outage in your area, you had bad signal, they dealt with it like that. Said, listen, we do see that there's a problem in your area with one of the masts, one of the exchanges. And what we're going to do is we're going to give you a month for free. Plus, we're going to give you access to Spotify because we value your custom. We do apologize that for Jigs. Jigs is going to be like, wow, that was great service. The markets want to be efficient. They don't want to be inefficient. So this becomes a point of interest. And that big, massive metaphor rigmarole that I've just gone round, should remain in your hard drive. That when you see these type of things, your eyes straight away go, inefficiency. Market doesn't like inefficiency. It's very, very possible the market is going to come back to that area and fix that inefficiency. That may give you a buying opportunity. Brrr. That may give you a selling opportunity after it does it. Brrr. But the concept and the way I've explained it is supposed to sit in your hard drive. So when you're looking at the markets, you are telling these stories to yourself. Like, there was strength and speed from here. Like, if I'm in a trade coming back up to this area, I've got to think to myself that maybe there's more sellers still in there that didn't get their whole order filled. Should I take my money before that point? Yeah, I'm going to take my money before that point. Boom, take my money before that point. Okay, I got my money. Oh, good job I did that because the sellers had more selling that they wanted to do from that area after this inefficiency was closed and the market fell off. Good job that I closed out my buy to here. And going back to our little diagram, we've seen how the markets come into a previous battlefield, which happens to be the middle of the M, as I've taught you guys. Oh, and this happens to be a manipulation M. Yeah, so this becomes an indication, this becomes a correction, this becomes a continuation. If you wanted to, you could be getting in down here with your stop above here. Obviously, it's going to impact your risk to reward. Yeah, but if you wanted to, as this market pushes up here, making its correction, you could zoom in, just like we did in our little diagram earlier, into that little area in here. And once again, look for the exact same thing. Yeah, that's what you could do. So that's the breakdown of the markets. All right, there's a breakdown of how we've gone through this simple structure, etc. And I want you guys to constantly play that story out in your mind whenever you're looking into these markets, looking at these candles. All right. Is there anything anybody wants to leave us with? We did run on a little bit, giving a little bit of education. Is there anything anybody wants to run on today? I know we do have some red folder news at, I think, at 3 o'clock. Let's just check. Yeah, we've got Fed Powell's testimony at 3 o'clock. All right. We've got some Fed Powell energy, which is more than likely going to affect the markets. And the markets have been a little bit funny, a little bit sideways. And maybe they're waiting for Fed Powell to say something before he before Trump starts flinging him out and whatever Trump wants to do. Yeah? Guys, have an absolutely amazing, amazing, amazing day. I'm going to put something on in our live room, and I'm going to love you and live you. All right? Let me go over here. We're going to find something that we're going to put on. That's going to...
Hey, how was the trades yesterday? Did you do anything yesterday? I didn't see anything, man. I thought it was dead.
I had meetings all day, and I think the trades that we was looking at just danced around all day. Like Nas didn't do anything. Some little jabs that I took in the morning didn't do anything. I think one of them took an L, but the market was literally a little bit slow. It was Monday. There's things going on, and like I said, I wasn't even able to identify any outside candles at all. Yeah. So like I said to you, sometimes when you see the markets like this, it's good to sit on your hands. Maybe whip out your demo account. Yeah. Whip out your demo account if you've got like the crackhead, you just need to press the button. Whip out your demo, hit the button on the demo, or even on TradingView, just add your little trading panel and hit the button there if that's what you need to do.